What's going on, Apes the Ape Army? We have a very important AMC update video to get into, and most specifically, we have the biggest short interest increase we have seen in a very long time. So I'm excited to bring you guys this information, but we're also going to be going over the Stonk tracker data as well as the technical levels to be watching for the downside and the upside, as well as the dark pool data and all the ortex information. So basically everything you guys need to know about if you are invested in AMC or you are trading AMC. Now with that being said, the only thing that I ask is that you hit that like button and subscribe to the channel to help push this video out to even more apes that need this accurate information, as well as check out the link down below for Public. They do not sell your order flows to companies like Citadel. The only companies that don't, obviously, Public, Fidelity, and Merrill Lynch. So if you guys are not a part of Public, it is literally free money. No need to even link a bank account or deposit a single dollar, and you get your stock immediately. Now, getting right into this information, guys, I was quite blown away when I actually seen this. We have short interest change of 4.82%, return shares of 5.81 million, borrowed shares of 10.18 million. That is a borrowed change of 4.37 million shares. So they shorted 4.37 million shares. They are crazy. They are losing their marbles, guys. Estimated short interest percentage of free flow at 14.29%. Estimated shares that are currently sold short at 73.09 million. And I expect, actually after today, we've seen about a 6% sell-off in AMC, that shorts are even doubling down on their positions, because we do know with the T+2 settlement, most of this data, not all of this data, is coming back for Friday most likely. So this is the biggest short interest change that we've seen in a very long time, and the fact that shorts are doing this is out of my realm. I have no idea what is going on in the brains of these smart money hedge fund managers, right? But the share utilization is something that I really want to point out for you guys, because not a lot of people have been talking about this. But think back to when we had about a 20 to 22% short interest. We were at about 94 to 95% share utilization in AMC. That is where we currently sit as well, and 94.02% share utilization, but our current short interest is only 14.29%, which does signify that hedge funds and institutions, they're less willing to actually lend out these shares to be sold short to other hedge funds and institutions. So that does mean a lot of other, bigger guys do think there's going to be a substantial move in AMC, and they are quite frankly not willing to take on the risk of letting their peers, right, other hedge funds and institutions, take on this risk by selling their shares short. So that is the gist of that. I think that's pretty important to keep in mind, the share utilization number. But the Stonk tracker data, this is something I want to point out as well. The gamma squeeze situation is getting more and more likely. Like we focus on this channel quite a lot, it's not really about in the money contracts. It is, but it isn't. We're going on Tuesday. Most of these options, if they're deep in the money, have been hedged for. If they're not deep in the money, they've probably been somewhat hedged for, right? And that is where the market makers will buy 100 shares per option contract. Oh, I wasn't supposed to do that. Per options contract, to make sure that they can fulfill their obligation without going completely underwater on their positions. And it also keeps the option chain liquid, so you have the ability to buy these options, right? Because if you're buying an option, there has to be a seller of those options. So that is where the market maker does come in, and to hedge their losses and still make profit. Say you have a $60 call for AMC. If AMC by Thursday or Friday is at $59.70, they're going to buy 100 shares for your option to make sure they at least make some money on the trade, or at the very least break even on the trade. Now, out the money options is where you really want to pay attention to, especially once you get to about Wednesday, Thursday, and Friday, but specifically Friday, because the more of these out the money contracts do start to run in the money, especially, like I said, the last 3 trading days of the week, the more hedging you are going to see. And that is where it is really significantly important to pay attention to when you're talking about a gamma squeeze. So we do have in the money contracts. That has not moved too much. We're at 67,308 contracts. Out the money at 211,362 contracts. So this number is going up exponentially. I believe it's up about 50,000 for the day. So this number is getting very very big, but it really doesn't matter if they're so far out the money. The market makers will not have to hedge for them. So let's take a look at the exact option chain and see what we are dealing with, guys. We're gonna take a look, and obviously we did fall today, so some of these contracts fell out the money, and I would say some of these have been hedged for, but the majority of them have not been hedged for. So we see about 2,000 to 3,000 contracts in between $56 and $60 strike, but at the 60 we do see almost 15,000 options, right? This has probably not been hedged for too much, if at all. And then what I've been pointing out on this channel is about every $5 you see a huge increase in option activity. But even from the 60 to 65, you see on the low end 2,700 contracts to almost 5,000 contracts. So that is pretty significant in and of itself, and something to keep mind of. But once you get to about 65, you have 15,000 contracts. So you're going to get a lot of steam if come Wednesday, Thursday, Friday, we get over $65. And then at 70, that's where it gets really interesting, guys. And obviously something to pay attention to if we do get to 60. We have 19,159 options. Now none of these have been hedged for. I can pretty much guarantee you of that. So if we do get to the $70 mark, obviously Wednesday, Thursday, Friday, we are going to see a lot of hedging that is going on. But once you break the $73 mark, I think that's where you start to go parabolic, just because of the fact if the average shorted AMC at $10 per share, if you're at $73, you're down 600 to 700% on your short positions. You're going to be getting automatic margin called, and specifically since they did pass, well, the NSCC 002, that was passed today. So you're going to see a lot more margin calls that are happening after today, right? Going into the future. But after 73, you start to get parabolic, not even just because the open interest, which is high on certain strikes, but just for the fact of shorts being significantly underwater on their positions. But once you get to 75, you have 5,600 contracts. Once you get to 80, that's where you see a lot more. You see 11,000 at the 80. And then obviously once you get to 90, you see about 5,000 at 95, 3,000, but at 100 you see 17,000. Now I don't know, I don't have a crystal ball if we will get to 100. That would be a huge move from here. So it really doesn't help the cause if people are buying super out the money contracts like these 145s. Sure, it might be cheap, but very unlikely that we actually get to this by the end of the week, and it is just too risky for me. So if you are willing to essentially buy lottery tickets, right, it's essentially playing the lottery, then do what you want to do. I'm not a financial advisor. I'm not a financial planner. None of that fancy jazz. So I'm not going to tell you exactly what to do, or this is not a recommendation in general, just giving you guys the information. But for me, these are way too risky and you're not really helping the movement. What is way less risky is actually buying closer to the money. Sure, it might cost a little more, but if you believe we're going to see that move up, if you bought these $60 contracts for $485 where they currently sit, your break even would be at about $65. If we at least close at $65, you will make money on these contracts. So I do think that is a better way to play AMC and would help the overall movement a lot more than buying these $100 to $145 options. I quite frankly think that is way too risky, at least for my liking. Now, as far as the dark pool data, position at negative 498 million shares, and this is an aggregate running total, so keep that in mind. Position of $26 billion, net short volume for the day, and this is what is actually for the day, of 22 million shares, net short volume of 1.3 billion. So that does add up to, like I said, 498 million shares, position size of 26 billion. So that is significantly high, as well as we see this overall trend to the upside, and even see this reflected in the ortex data. And I'm still blown away of the short interest change we see for the day. These shorts that are shorting AMC literally are losing their minds right now. But let's take a look at the technical levels to be watching for, guys. And we still are in a bullish pattern. And one thing that is very important that I do want to point out to you guys is we are still in a very good situation to make more moves up to the upside. We have not fallen under these crucial levels that will really put us into a bearish pattern. The first one of those is going to be this $50 mark. If we break $50, then we're going to go into, a slightly bearish pattern. If we break about this $40 mark, that's where it starts to get pretty bullish or even neutral, right? That would be pretty much our consolidation range. Anything over $50, I would consider as a bullish movement, and you still see that reflected in the trend line. Even though we're slightly under that right now, it wouldn't take much, right, to go back over that. And like I said, as long as we stay over $50, it all does look good. But we do own the float, so as long as you guys aren't getting scared and panic selling, then all does look good here. But let's take a look at the volume, because that is critically important as well when you are looking at AMC stock. And we did see 183 million in volume today. That is down significantly from what we seen 2 trading days ago at 301 million in volume. 242 million the last trading day, which was Friday, obviously, and then 183 million today. So we're seeing volume consistently go down. I think a lot of apes are just holding their positions, and the algorithms are trying to basically fool you guys into thinking the stock is going to continue to come down. And the reasoning, at least I don't think that is going to happen, or we are going to go down to these low levels that we've seen before this initial rally, right? For a couple reasons, quite frankly. One of those is all of these options, especially the June 18th options around that $40 strike, $40 to $50 strike. A lot of people exercise these options. So a lot of people do hold AMC shares at about that $40 price point. You would take a major move to the downside to scare enough people out of these options that they exercise, like I said, at about the $40 mark, to see a significant downfall under that $40 mark to $30, $20 for a long period of time. So I don't think that's going to happen. As well as the shorts, they still have to cover, guys. That has not changed. They still have to cover. They're digging themselves an even bigger hole, and as long as the apes do hold, then we have the say so here. Now, as far as the RSI, we are in slightly oversold territory, not significantly oversold, right? We're only at 42.09, so we could go down more, right? More oversold than where we currently are as far as the RSI. It's not signaling too much as far as an actual movement that will ensue after today, but we are down 0.25% after hours. This is actually going down, so we are starting to rise in after hours. We will have to see what this does until 8 o'clock when after hours does close. I do think we will end after hours positively and then open up tomorrow on a more positive note. Now, the overall stock market did do good, so if the stock market is down tomorrow, AMC will probably do good. They tend to invert each other. Now, as far as the MACD, we are obviously bearish. That is when the yellow CCC line is below the blue signal line. Nothing to be too concerned about. With the 6% down day, that is likely to happen. Now, as far as the upside, it still stays at about $65, but if we can consistently close over $60, that is where it looks really, really good. And I do want to bear this in mind for everybody that is wondering, like, how far are we going to keep going down? Is this going to go down forever and stay down? I don't think so. Another reason why, right, is because you are seeing this strong consolidation period even going to the upside. If we were dealing with a pump and dump, or, you know, whatever the case was, people were panicking, you would see a much sharper drop like you've seen on Orphazine, stocks that I warn about on this channel. You would see a much sharper drop that we are quite frankly not seeing right now. Some of the reason I do think why we're selling off so much today is obviously more shorts starting to short this stock. We see this reflected in the Ortex data, but we will not know exactly what the numbers are until about Wednesday. So that'll be really, really important to pay attention to. But that is pretty much all I have for this video, guys. We really need to watch what the volume does do. The more volume we get, the better the price action does seem to be, at least for the upside. So with all of that being said, that is everything you guys need to know if you're holding AMC or if you are trading AMC. Like I said, that's going to wrap up this video. On your way out, make sure to hit that like button and subscribe to the channel and help push this video out to as many people as possible that do need to hear this accurate AMC information, as well as check out the links down below for public and Webull. I guess they have a new feature where you can choose not to lend your shares out to other institutions and hedge funds. So that is a great feature as well. I do like Webull. They give you pretty good fills, but like I said, get up to $2,300 using the link down below. I just got a free share of Starbucks, so they are giving out very, very good shares right now, as well as if you guys want to stay up to date with the moves that we are making in the community, I send out all of my buy and sell alerts in real time. We've been killing it over there. Check out the link down below for the buy and sell alerts. I will see you guys later. Until next time, take care.